Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. U.S. Stock Market Analysis, June 8th. This video presents a direct informational narration of the source document. Following a significant decline last Friday, market activity indicates an attempt at stabilization amid fragile sentiment. We will now review the underlying factors. The agenda is structured as follows. First, macro factors and technicals, followed by CPI and rates. We will then cover the semiconductor rebound, storage dynamics, corporate tech developments, and conclude with the sector outlook. Section 1 covers macro factors and market technicals. Weekend geopolitical developments in the Middle East influenced market sentiment at the open, temporarily mitigating broader inflation concerns. In response to Israeli strikes on Lebanon, Iran launched missiles into Israeli territory. Approximately 1 hour prior to the U.S. market open, former President Trump contacted the Israeli Prime Minister to pause retaliation and posted on social media regarding immediate ceasefire discussions. Subsequently, Iran announced a pause in military strikes, which coincided with a drop in previously elevated oil prices. Additionally, the International Energy Agency revised its projection for the reopening of the Strait of Hormuz from early June to late July. This rapid de-escalation sequence halted the immediate upward pressure of oil prices on inflation expectations. Despite the easing of geopolitical tensions, underlying liquidity constraints persist. The 10-year Treasury yield maintained its upward trajectory, remaining above 4.5%, which acts as a primary constraint on broader market rebounds. Concurrently, while the VIX Volatility Index declined below 20, providing some relief, it remained above 16. This indicates that hedging and risk aversion positioning within the options market continues to be substantial. Section 2 details approaching CPI data and rate considerations. Institutional focus is currently directed toward forthcoming macroeconomic data and interest rate trajectories. Bank of America's strategy team noted that the upcoming Wednesday CPI report is a critical focal point for June. According to their analysis of 100 years of historical data, if the CPI exceeds 4%, the S&P 500 has historically averaged a 4% decline over the subsequent 3 months and a 7% decline over 6 months. This historical precedent contributes to institutional hesitancy prior to the data release. This dynamic is compounded by potential rate adjustments from the European Central Bank, as well as upcoming meetings for the Bank of Japan and the Federal Reserve. Against this macroeconomic backdrop, the indices exhibit multi-level resistance. The QQQ formed a doji candle, indicating a temporary balance between long and short positioning. The S&P 500 tested the monthly moving average, but encountered selling pressure, retreating to the 30-day moving average. Technical recovery from Friday's decline will require observation. Volume expansion and stabilization above the monthly and 5-day moving averages are required parameters for technical recovery. Leading up to the CPI release, low volume consolidation above the 30-day moving average is the currently observed trajectory. Section 3 examines the semiconductor sector rebound. The semiconductor sector recorded a 5.6% increase. Analysis indicates that Friday's decline was primarily driven by forced liquidations of leveraged funds and simultaneous sell signals from quantitative models, rather than a fundamental trend reversal. Speaking in Korea, NVIDIA CEO Jensen Huang stated that AI infrastructure development is in its initial stages, characterizing the recent decline as stock market volatility and a discounted buying opportunity. Additionally, NVIDIA announced a multi-year technology collaboration with SK hynix focused on next-generation storage products. Morgan Stanley issued a rebuttal regarding rumors that NVIDIA reduced VR memory configurations due to weakening demand. The firm clarified that the adjustment is strictly a result of severe DRAM supply constraints. High-capacity allocations are projected to resume once supply levels recover. Jensen Huang corroborated the strong demand environment, noting that SK hynix's plan to double wafer capacity by 2030 remains insufficient. Furthermore, NVIDIA has formed a partnership with LG Group encompassing robotics, data centers, and autonomous driving, with Huang highlighting the approaching industrialization of robotics. Section 4 covers storage market supply dynamics. Manufacturing bottlenecks are increasingly apparent. In an interview with JP Morgan, Elon Musk addressed the storage sector, identifying chip manufacturing capacity as the primary bottleneck. He explicitly noted that Micron's production levels are significantly below actual market demand. Following these remarks, Micron's stock price increased by nearly 10%. In related coverage, Bank of America revised its price target for Western Digital upward, moving from $1,500 to $2,100. Associated with this target upgrade, Western Digital stock registered a 5.3% increase.
Bank of America's thesis is based on robust supply-demand dynamics. Western Digital has reportedly secured over 33% of its revenue for 2027. As NAND average selling prices continue to appreciate, the remaining 60% of supply is positioned to be sold at higher price points, supporting long-term margin profiles. Their models project NAND price increases to be maintained throughout 2026 and into the first half of 2027. Meaningful new market supply is not modeled to emerge until 2028 or 2029, outlining a multi-year structural advantage for storage providers.
Section 5 details corporate tech developments. Recent corporate actions illustrate ongoing capital deployment in technology infrastructure. Intel stock increased over 11% following reports that Google and NVIDIA are evaluating Intel as an alternative foundry option due to capacity constraints at TSMC. Google has reportedly ordered over 3 million TPU chips for 2028, and NVIDIA is evaluating the 18A process, validating Intel's entry into high-end AI manufacturing. Coherent increased nearly 5.6% after Amazon announced a multi-billion-dollar long-term optical procurement agreement. Additionally, Dell, which experienced a 17% decline last Friday, gapped up at the open following the announcement of its inclusion in the S&P 500 index effective June 22nd.
Section 6 concludes with sector updates and the market outlook. During its annual WWDC event, Apple introduced its AI platform, Apple Intelligence. However, the company disclosed that the initial rollout will be withheld in the EU and Chinese markets due to regulatory compliance requirements. Following this announcement, the stock experienced selling pressure. Apple's current price-to-earnings ratio stands at 36.5 times, which is above its 5-year average of 27.6 times. This elevated valuation multiple suggests a premium that may require careful monitoring.
In the healthcare sector, Eli Lilly reached a record high before experiencing some profit-taking, ultimately closing in positive territory. Clinical data for its next-generation 4-milligram low-dose weight loss drug demonstrated approximately 19% weight loss. This efficacy closely matches the highest dose of Zepbound, suggesting an improved efficacy profile with potentially lower side effects. Additionally, prescriptions for its oral medication are showing weekly growth significantly exceeding the 20,000 figure reported in the first quarter.
Wolfspeed announced a partnership with BAE Systems to integrate high-voltage silicon carbide applications into aerospace, defense, and AI data centers. The stock gained over 9% intraday. However, amid broader market risk aversion and a lack of sustained buying volume, the stock closed flat, relinquishing its intraday gains.
In summary, market dynamics are currently balancing AI growth drivers against interest rate expectations. The upcoming Wednesday CPI report is positioned as a key directional indicator. If the CPI data cools or aligns with expectations, it may suggest that Friday's sell-off was an overreaction, potentially supporting a resumption of the AI-related rally. Conversely, if the CPI data runs hot, high-valuation technology equities may encounter renewed downward pressure. The current market posture indicates that until this specific macroeconomic data point is resolved, recent upward movements are being evaluated in the context of broader rate vulnerabilities.